So far this year, Bitcoin has dropped from 109K to around 76K, and now it's gone back up to around 98K. So this price action has got people wondering, is the bull market really back? After all, it's not just Bitcoin, but some altcoins like Sui and Hype have also recovered recently. But we gotta be careful here because this could also be one of those fake out rallies that the market is famous for. And if we deploy too heavily into that, then it'll just get us wrecked even more. That's why in today's video, I want to explore the case for both sides, that the bull market is back and that this is just a temporary fake out and that we're headed back down again soon. So be sure to watch until the end to get the complete picture so that you can make the most informed decision for your own portfolio. All right, let's start with the bull case. And first of all, you gotta know that the whales are back. And boy, are they hungry. Bitcoin wallets holding over 10,000 BTC are buying at levels that we haven't seen since the last major run-up. And even medium-sized whales holding between 100 to 1,000 BTC have started to buy aggressively. Also, long-term holders have accumulated over 300,000 Bitcoin in the past 30 days. So historically, when we see this kind of whale activity, Bitcoin jumps around 50% shortly after. Like, remember when Bitcoin was under 40K and whales were aggressively buying? Well, that was the start of an 80% rally that followed soon after. So point is, the whales are super bullish right now when retail is arguably bearish or uncertain. And let's be real, usually the whales know better than us retail investors. But anyhow, the next reason why the bull market may be back is that the balance of Bitcoin on exchanges have dropped to their lowest point since 2018. This means that people aren't looking to sell, but rather they're holding. Just recently, we saw a huge outflow of almost 28,000 BTC from Binance alone, the third largest of such moves in history. And big money moving coins off exchanges usually means that institutions are gearing for a major move up. Combine that with the record amount of inflows into Bitcoin ETFs, I'm talking 3.1 billion in the last week of April, and it's clear that big players are all in. But there's another interesting point here, and it's the fact that OTC desks only have around 150K BTC left. So that's only around $13 billion worth of buy pressure before their balances hit zero. And when that happens, guess what? Well, it means that if they want more, then they'd have to buy it off exchanges, which already have low balances because of all those outflows. So any tiny bit of buying pressure would send the price rocketing. But anyhow, here's another interesting point to consider. So even with Bitcoin's recent recovery, a lot of traders remain skeptical and are shorting on top exchanges. That's why we see all these negative funding rates on those exchanges. But historically, every time we've seen these negative rates at critical moments, Bitcoin ends up going on a tear. For example, Bitcoin exploded from 28K to 73K in late 2023, and again from 57K to 108K last year, both following periods of negative funding rates. So all this skepticism by traders could turn into rocket fuel for a potential rally. Now, another massive factor for a bull market has to do with regulation. You see, Paul Atkins, the new SEC chair, is way more friendly to crypto than Gary Gensler ever was. He may introduce a safe harbor initiative that basically makes it easier for projects with tokens to build in the United States. That means more projects and more capital could flow into our industry, which of course would help prices down the line. Plus, stablecoins may soon get a regulatory green light through the Genius Act, which would boost the industry in the United States. So yeah, all these positive developments on the regulatory front may lead to a new bull market for our industry. And with major players like BlackRock and Fidelity involved, things could get even wilder than ever before. Now, another strong point in the bullish case is that macro is becoming bullish too. You see, global liquidity, aka the M2 money supply, is shooting up again. And historically, Bitcoin's price has closely followed that. We're talking about a 94% correlation here. So if liquidity continues to rise, it could help pump Bitcoin. And some models even suggest that it could hit 142K by the middle of this year due to that extra liquidity. Now, even if you don't believe all that M2 and Bitcoin stuff, well, there's another bullish macro indicator for ya, and that's the DXY falling. You see, the US dollar index recently broke critical support and formed a death cross of sorts, which historically is a strong signal for Bitcoin rallies. When the dollar weakens, investors typically buy riskier assets such as Bitcoin, and that's why a lot of macro analysts are feeling bullish on Bitcoin these days. Now, last but definitely not least, a key argument on the bull side is that this cycle is not over, and we're just in a mid-cycle lull currently. Because if the cycle is over, then it wouldn't make sense for the bull market to be back, right? But anyhow, the evidence here is that none of the major on-chain indicators have reached their overheated zones yet. Like the CBBI index, which is a combination of 9 top metrics, is currently at around 72. And historically, Bitcoin tops when this metric hits 90 or above. Also, none of CoinGlass's 30 spot the top indicators have flashed yet, which is why many people are still convinced that this cycle is not over. And if they're right, well, then it's very possible that the bull market is back after a few months of downwards or sideways price action. But anyhow, that's the strongest bull case that I can make, but now it's time to evaluate the bear case before you start deploying again. But before you get there, I want to quickly share with you something big that just happened in the AI crypto space. So Worldcoin had an event just last week called At Last, and in it, they announced some major moves that they've been making. First and foremost, they've officially started rolling out their services to major cities in the US, such as LA, Miami, and New York. They also introduced a new portable version of their biometric orb device called the Orb Mini, and they're setting up a factory in Texas to produce over 7,500 of these devices. But what really caught my attention was their new partnerships. You see, Match Group, the parent company of Tinder, is using World ID to reduce bots and fake profiles on their dating apps. And Visa is exploring verified payments through Worldcoin's tech. So basically, they're positioning themselves as an identity solution for a future internet that's dominated by AI bots. And if you want to get a glimpse of that future for yourself, then just go check out their products like their World app using my links below. Alright, back to the bear case, aka the case that the bull market is not back and that this is just a temporary recovery. And the first point here has to do with realized cap, a really important metric to consider. So if realized cap is rising, it means that new capital is entering the market. However, if the overall market cap isn't moving higher with it, then it means that there's heavy selling pressure that prevents the price from going up. And right now, that's exactly what's going on. Realized cap is going up, but Bitcoin's price isn't following. So this indicates strong selling pressure, suggesting that sellers are absorbing most of the buying pressure. And historically, when even large inflows of money can't push the price higher, it means that we're in bear mode, not bull mode. Also, on top of that, the spot volume delta recently turned negative, which means that sellers are aggressively taking profits and potentially overwhelming buyers. So that's a potential sign that this recent rally is reversing. Now, another key point to consider is that a recession may be on the horizon. JP Morgan just raised their odds of a US recession to 60%, and Polymarket has it at 57%. But if you look at the top economic indicators like corporate earnings revisions, manufacturing orders, and capital expenditures, you see that they're all dropping rapidly. And honestly, if you ask me, it definitely feels like we're already in a recession. Like companies, consumers, pretty much everyone is feeling uncertain and hence is tight with their wallets. Now, what does that mean for Bitcoin? Well, historically, Bitcoin has struggled during recessions, which makes sense, right? Like people aren't really investing their spare cash into Bitcoin or other assets because they don't have any spare cash to begin with when things are tight. But anyhow, another key point on the bear side is that crypto doesn't really have any fresh catalysts right now. And as we all know, catalysts and narratives are super important in the crypto space. I mean, last year we had so many things to be excited about. We had the spot ETFs, we had the Bitcoin halving, we had Trump becoming our pumper in chief, and big narratives like AI agents. But now, that's all priced in, and we don't have any new or exciting stuff on the horizon. So maybe that's why retail investors aren't that excited. As you can see, Bitcoin searches on Google just hit their lowest point since October of 2024. And VCs are risk off too, as their funding is at levels that we haven't seen since 2023. So without fresh narratives to excite new investors, Bitcoin might just stall out. Now, another thing is that technical indicators are also flashing warning signs. Like MACD, for example, has just confirmed bearish crossovers across multiple different time frames, and that's been a reliable signal of trend reversals in the past. Also, Bitcoin's ADX indicator, which is a key measure of trend strength, is below 20, meaning that the market is likely in a sideways choppy period. Furthermore, right now Bitcoin is trading at a critical resistance level with surprisingly low volume backing up this recent move. So if Bitcoin can't convincingly break this level in the mid 90Ks, then there's a high chance that we see a bearish reversal or a prolonged sideways period. Now here's the thing, even if the bear case is right, it doesn't mean that we'll see new lows. Because another likely scenario is that we just range sideways for the rest of this year. In fact, that's what Marcus Thielen of 10x Research is predicting. He says that we could very well be in a period like 2024 and range between the mid 70 to 90Ks before we finally get a big move later this year. But yeah, honestly, both sides have some pretty convincing arguments in my opinion. But my gut feeling is that the lows are already in. The market is forward looking after all, and it feels like a lot of the tariffs and recession stuff are already priced in. But that doesn't mean that we're just gonna instantly resume bull mode and go to new all-time highs, right? In fact, I do think that sideways is the most likely price action, and I put that at a 60% likelihood. And then in terms of getting a raging bull market, I put that at a 30% chance, and then back to new lows at like 10% chance. So yeah, that's where I'm at, but what about you? I wanna know what you think is more likely at this point. Please drop your thoughts in the comments below so we can all share notes. Oh, and by the way, if you haven't seen this yet, check out my detailed breakdown comparing Bitcoin and gold as investments, especially since gold has been killing it lately. Just watch that video right here.